The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, overall, Thursday's trade action outside of some decent strength in beans and in Chicago, or in cattle, I should say, Chicago wheat, KC wheat, corn, everything felt fairly quiet on the session. We have some things to take a look at, and we're going to do that right now. Joining us, VP of Brokerage Solutions, Senior Market Advisor at Total Farm Marketing, Bryan Doherty is with us here today. Bryan, always great to catch up with you and have a conversation. I hope you're doing well.
Well, thank you, Jess, and we are. Interesting week so far. We saw soybeans made a nice hook reversal yesterday after trading lower. Then they bounced back and finished 3 higher, so 13 lower to 3 higher. So follow through today. So you got a nice turnaround the last couple of days. I would tell you early yield results are pretty slim right now, but seem to be pointing toward that variability in soybean yield so far. So at least it's more of what we're not hearing. We're not hearing people say, oh my gosh, the beans are a lot better than we ever thought. Not hearing that yet.
I'm hearing some of that same, a lot of variable in the Western Corn Belt, some of this early harvest. If you had good soil and got some rain that was timely, you're happy with your bean yields right now. But if you're not in that camp, then we've got some issues, and I'm with you. It feels like that's maybe giving a little bit of support here into this bean market overall, just with the tighter balance sheet overall here, Bryan.
It is, and you hit a kind of a key point. Is the balance sheet still tightened this week, even though it wasn't what many were hoping for, as the USDA took another sort of, let's call it a little knife to usage, dropping total usage 45 million bushels. So carryout dropped from 240 to 220. There were many of us who thought we might edge under that 200 million. And then you start looking at yield. And the question is, are we still 50 bushels an acre in this crop? And we'll see. My guess is no, but we'll see.
Yeah, I think it remains to be seen, and it feels like now that the September WASDE is behind us, I know we have quarterly grain stocks coming up here at the end of the month, and then we'll have the October report, but it feels like between now and then, it's really going to be about some of these early harvest yield results. It just kind of feels like this market is setting up in soybeans and in corn, I think, to kind of just trade sideways here. Bryan, are you getting that feeling?
Well, corn definitely is doing that, and on many accounts, that's what you look for in the corn market. It's what we call a saucer bottom, where the bottom is like a saucer of a plate. Okay. And beans, sometimes a little bit more V-type bottom. So the corn market is base building. It certainly looks on the chart, and when you look at the USDA report, to carry out 2.2 billion, that this could have legged lower, and it didn't happen. So I think that's kind of a victory. So it wasn't that we had all this bullish news. It's just that the market sort of absorbed what might be the bearish news. But getting it back to talking with lots and lots and lots of farmers, and our team talking to lots of farmers, and then me being on the road a little bit and seeing things, I'm always looking for a theme. The theme is the word variability, just a lot of variability in expectations, and we'll see where it goes. So what's the flaw in that? The flaw could be this, just something to dwell on, is that I think farmers, because they're human like all of us, if they're worried about their crop, they're probably going to, tell themselves it's X, so they're not disappointed if it is as much, and hope for better. And if it's better, well, then it's pleasantly surprised. We'll see if that happens. It just doesn't seem like, though, this year has the makings. That drought monitor map was just pesky all year, and the last 5 weeks, the amount of corn and soybean ground in the drought monitor maps in drought conditions rose from the upper 30 and 40% level now to the mid to upper 40s. So not good finishing weather.
No, not good finishing weather. On the corn chart, you mentioned kind of that saucer bottom you like to look for. It almost looked to me, if I was looking at it right, we were kind of maybe finding a bit of a double bottom type feature around this 480 mark right now in December corn. Is that, am I looking at that right, Brian? Is that
Nope,
something we're seeing?
you got that exactly right. And really, if you talk about a saucer bottom, it needs to have some time behind it to get there. And
Mhm.
so the chart you're looking at, for instance, I look at the December corn chart. If you take a hard glance at that chart, what you're seeing is the market really hasn't moved much at all in a month. And so, for example, today we're at 480. Well, August 11th, we were at 483. And then after that, we were the day after. So a month's gone by, and we're at the same price. Usually it takes a couple of months. The encouraging sign is we saw a couple of weekdays um, yesterday and the day before, and the market tested the Bollinger Band, which is a technical indicator of support, and it found buying interest there. I think on big picture, though, it's really hard to imagine that farmers are just going to flood the market with this year's harvest. I think, if anything, they'll sell beans because beans are relatively close to their high and corn's relatively close to their low. So I think farmers are holders of corn, and they've got the storage space for it. Remember last year we were
Mhm.
really tight in inventories, had these monster basis levels in parts of the Midwest.
Yep.
Those empty spaces are there.
Yeah, good thoughts to consider, and that's a lot of the same that I'm hearing as well. I think it's going to be a case of selling beans off the combine, storing that corn, and going from there. I know as well the wheat market kind of roped into this whole picture too. Stats Canada increased their spring wheat production number a bit on Thursday, and that seemed maybe a little bearish. I know the USDA numbers from Tuesday, the world numbers were maybe a little friendly to the overall world wheat picture, but I what's your thoughts in this overall tone in the wheat market and how that's playing into any moves in corn and beans right now, Brian?
Well, sometimes you got to step back from market and say, okay, well, we're in a downtrend, but why? And the why might be that the managed money has just continued to be short, so they've been selling every rally. The same thing in corn, and so wheat has had that defensive posturing for some time, but it's getting cheap enough from
Mhm.
a lot of perspectives, and it's actually looking like the WASD report um, provided support. So one of the things it did tell us is that we're at a long-term low level of wheat countries that have exportable supplies. So that stocks to usage number. That is their carryout in those countries divided by usage is about like 13.5, and that's running just a sliver ahead of where the market was back in '08 and or 12. I got to double check that. But you can go back to the early 60s and see this level of low is rarely this low. And so like to think that the wheat market has just kind of got the spring compressed and primed to run. What you need is just some really good export activity or continued concerns in a country like Australia where El Nino will be an impactor, and maybe South American weather. Argentina still stay net dry. You've got some concerns with Europe dry, and then Australia and India, we're not sure on yet, but
Mhm.
probably looking like net dry there. So world supplies are not abundant, exportable supplies. And then, of course, you got the war escalating, what appears to
Yep.
be, and today we were reading an article here about bracing for slower exports in the year ahead. And that only makes sense when you're seeing your terminals devastated.
Very, very true. You mentioned exports in there for a second. Didn't seem like anything to write home about on the weekly export sales numbers really across the board, Brian. Did you see anything there on Thursday?
No, nothing that really jumped out. What I'd like to see is just consistent and progressive new crop corn sales because we are in the new marketing year there, and didn't really see any numbers that lit a fire for us there. So if we if we kind of look at the big picture, we have to be a little bit more, I think, mindful
Mhm.
that we need to see that kick in. The message is still to end users, though, basically buy what you need. and that's where they are presently.
We're having a conversation here today with Bryan Doherty from Total Farm Marketing. Bryan, we've had plenty of economic inflationary data out this week as well. The consumer price index, the producer price index. We're seeing the dollar get back above 105. Crude oil's up at $90 a barrel on Thursday. So maybe some headwinds potentially in the outside markets. I mean, what's your take on just some of that data? I know we have the Fed meeting next week as well. What's your thoughts on potential impacts there, Bryan? I know we've talked about this before.
Sure.
It's always interesting to just kind of follow this, though, month to month.
It is, and it's speculation because we're always trying to guess what the Fed's going to do. And one week it seems like they're leaning toward, an environment where they've kind of done what they're going to do for now.
Mm-hmm.
And then you read another article that says, boy, they still don't have this under control, and that they're going to have to raise interest rates even further. I don't know. It's speculative on my end, but let me start with the crude oil. You mentioned the crude oil and the strength under that. And that brings me back to the soybean market. So when you get $90 crude and you've got rig counts, the rigs that drill oil, steadily declining, and then you've got Saudi Arabia and other countries in a spot or in a position where the market is likely to see limited supply at least through the fourth quarter. All of a sudden you've got this, really, I'm going to call it strong uptrend in energies and now building momentum. So that should bode well for the bioenergies market, in particular soybean oil, vegetable oils, those things. Big picture, though, boy, we worry about inflation and we worry about consumer dollars and China's economy. And so while this data comes out and sometimes it's conflicting, which we saw earlier in the week, the general genre is that I think we're on some pretty thin ice with economies around the world, including our own. When I say our own, that the consumer is spending too much money, and at some point that comes home to roost.
Good thoughts to consider there, Bryan. Let's talk livestock a little bit. Cattle had a really solid day Thursday in the fats and the feeders. Still waiting for that cash cattle trade to really tick up, but still finding some buying support on the board on Thursday.
It is, and there's another market. We sound like broken records, but just showing strength week after week after week. Limited. It's a supply-driven market, but so what? You still have to have somebody step up and buy. And that's what we're seeing. Now, I didn't get a chance to look at the export numbers today, so I'm not sure where that might have come into play. But as far as the cutout values and movement of beef, movement of product, that looks really good in that market yet. I would still tackle that if I'm a producer by purchasing puts, ensure that you have a floor in the market. This idea of $200 cattle, we talked about it. We said it's possible. It's just looking more and more likely. What I can't understand is why it takes so long to get the cash market established. It seemed like, years ago it was kind of the tone was set by Tuesday and followed through Wednesday and Thursday was kind of done. And now we're trying to look for cash markets on Thursday and Fridays. I'm not sure why that is. It might be just the limited supply and sort of the jockeying between what packers want to pay and what producers are willing to accept.
Yeah, very, very true. Export sales numbers on the beef side, 6,200 metric tons. We were actually down 48% from last week. So interesting correlation there to still have a higher day in the beef trade with that lower number. So something to think about. Hogs felt like profit taking to me on Thursday. The hog sales numbers for the week was just a little over 23,000 metric tons. We were down 12%. But to me, that hog trade just maybe felt like a round of profit taking Thursday.
It did, and what's interesting there is it just doesn't look like the hog industry is making any money right now. And the latest numbers out of a recent study showed that it's been several months running that the hog producers are running in the red. So I'm just surprised that the board isn't trying to move up a little bit more. I'm really getting sort of my top of my head sore from scratching so hard why December hogs are $75 and December cattle are $190.
Yeah.
It just, that's a historically wide perspective there. But good demand again in the beef market. Hog market not quite as good. Although I do wonder if we're going to start to see some decline in the hog industry. Doubtful, but we might. And the reason I say doubtful is because the key there, I think, has always been the feed availability and feed supply, and it's cheaper than it was a year ago. And I don't, I don't think it's at a price right now that would cause hog producers to liquidate, but it does maybe limit expansion in the industry.
Bryan, a little bit of green on the screen in dairy on Thursday, it looks like. Any notes in the dairy market trade?
Yeah, a couple notes to be well aware of, and why this market is kind of no different than any other market. But when it has rally, and we've seen rallies, they end abruptly and quickly. So it goes back to the idea of, if you have target points in mind, get those in place. Just looking at, as an example, the October milk posted a really large bearish key reversal on September 8th, hit a high in 1948. All of a sudden, we're down into today. We're under 18 at one point. Now it's clawed back above it, but that's a big change in a very short window of time. Same problem that I see in the milk is just the producers, that leg of really reducing the herd when prices were lower, because a lot of farmers, a lot of herd managers had good insurance or hedges in place. So the pain in the dairy industry for many was almost nullified. The question is, can you make money at $18 milk right now? That's going to be pretty tough unless corn prices weaken. Margins are you probably need to see the market back at $18.5, $19, $20. And it doesn't seem like there's a lot of reason to expect $20 milk. Exports too are key. China is a big consumer. Roughly in a big, I'm rounding up, 20% of milk products somehow ends up into the export market.
Bryan, as always, we appreciate the time. And I know if folks want to reach out to you and have a conversation there at Total Farm Marketing, they could do that very easily. How can they reach you?
Yeah, the best way is with a phone call first, 800-334-9779. I'd ask to start with that. And then give a shout through email, Bryan with a Y, so BRYN at totalfarmmarketing.com. Shoot you an email back. And then take a look at our website, totalfarmmarketing.com.
Bryan Doherty with Total Farm Marketing. Always a pleasure. Thanks for joining us. Have a great weekend, and we'll talk to you next week.
Excellent. Thank you.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.